All right, I'm hoping that this is all coming through loud and clear now. And I'm just going to check on my other monitor. It looks like we are working. Perfect. And I am sorry about that, guys. YouTube, for some reason, had another time zone in Australia selected that's half an hour away. And for you guys that know about the time zones in Australia, there's actually about half a dozen different time zones. Some of them are on daylight savings, some of them are half an hour apart, and I'm really sorry about that. I don't know what happened there. So we will give everyone just a minute to tune in. We've already got 250 waiting, which is awesome. If you can all smash the like button and we can get that to 250 likes, that would be phenomenal. And tonight we are going to talk all about the different asset classes. I'm going to do my best to tie it all together for you and talk about where I think markets are going. If we've seen the bottom, if this is a bounce, and whether or not markets can continue down this delusionary path where Wall Street and Main Street are actually two very different things, and all this money printing is only going to amplify that. So we'll start in just a sec. If you are watching this later, feel free to skip forward. My team normally try to do timestamps for the topics we covered. Give them 12 to 24 hours. They're pretty sharp these days at doing that. But as always, if you do have that time, I do try and tie all these things together. And it's this ongoing education, this journey that we're all going on together. And I really think we've done really well lately. If you've been following the updates about coronavirus and stocks, gold, silver, Bitcoin, we really have been hitting our straps lately. So I hope that has helped you guys as well. I just want to show you one thing quickly as well. This is the pinned tweet I always have at the top of my Twitter feed. We're going to be talking about the US dollar purchasing power in just a second. But I had a really, a really proud moment today. So a company that's pretty well respected around Australia, Business Insider Australia, voting Nuggets News as one of the best finance and investing podcasts. So if you don't know, all our videos are turned into podcasts, as well as a few little bonus episodes. When I'm a guest on other people's channels or shows, we normally try and upload those to the podcast. So a lot of the time, the videos, you'll get more out of them with all the graphs and whatnot. But some of the interviews we've had, like Raul and those top guests, they're starting to make their way up the charts on all the different podcasts and iTunes. So we've renamed that. I think it's Nuggets News Crypto and Finance podcast these days. So we get the hits and the searches for people looking for finance and investing, but making our way up into the top 30, I believe, today on iTunes. Investing and finance podcasts, and getting in the top 10 here in Australia. So stuff that I didn't necessarily think we'd ever venture into too much because of my passion in covering crypto, but it looks like tying the two together, and crypto has found its way into the macro and investing world. And someone like Business Australia getting behind us, it brings in that new wave of investors. And if I can tie this together for them in an episode like tonight, and they say, you know what, that makes sense, the way that Nugget spoke about Bitcoin and gold and whatnot. It's no longer this tinfoil hat or this scary thing to invest in. So we'll give everyone just a second. Thank you to everyone who smashed the like button. We're nearly up to 200 likes already. I think we're going to get 500 or more tuning in tonight as everyone's at home. And without too much further ado, guys, it's a couple of minutes past 8 o'clock. Let's get into it. So most of you are familiar with USDebtClock.org. This has actually got a lot of other features on there if you have a play around and click through a few of these, and I am going to talk you through those. But we often concentrate on this big number, the US national debt. We're going to talk about a few of the other, the more nuanced factors with what's going on. A lot of these ratios, looking between, what's the ratio between gold and oil and stocks? The paper to gold ratio is one that we've been talking about. Paper silver to real silver ratio, 174 to 1. Last week or 2 weeks ago, I did that video about how to exploit that. So using and buying the SLV ETF and waiting until the physical metal price evens back out, and hopefully I'm going to end up buying 50% more silver than I otherwise would have. So the big question we want to answer tonight, all this money printing, is it going to keep stocks afloat? Is it going to get the real economy going? Is it going to lead to the US dollar going down in value? That's the question on everyone's lips at the moment, with the US dollar being so strong and other currencies like the Aussie dollar showing a lot of weakness. What are the long-term side effects as other countries have seen? So let's get into it. 500 tuning in. We're over that 200 like mark. You guys are fantastic. And without you, stuff like that doesn't happen. So I've got this pinned on Twitter, the purchasing power of the US dollar. You've all seen it over time. And one concept that I really want you to understand tonight is everything we talk about is relevant. So it's no good telling me that the Venezuelan stock market went up, it's at all-time highs. That's no good to people in Venezuela, because relevant to them, the loaf of bread is at an all-time high. The rent, their life savings, everything else is just ballooned out of control. So whether we're talking about the Aussie dollar to the US dollar, whether we're talking about Australian property, options trading in crypto on FTX, whatever it is, when we are putting on a trade or an investment and putting our financial hat on, we've got to say, well, what is this relevant to? What am I doing? Who's on the other side of the screen? Are they laughing at me because I'm not understanding the trade I'm doing or what this is relevant to? And tying it all together. That's really what this channel's all about. So everyone's talking about the Fed printing this money. The balance sheet's jumped. Here we can see what looks like a small blip on the radar back in the global financial crisis, where the Fed ended up stimulating, over $1 trillion there. And more recently, this number's jumped to over $6 trillion in the balance sheet. It's the sharpest jump we've ever had. Trump's already talking about another $2 trillion or so of stimulus, and that's going to take it up towards $8 trillion. But I think they're going to have to do more than that, and we're going to get into why that is tonight as well, guys. So I'm just going to have a look at the comments. I want to make sure this is all coming through loud and clear. It looks like it is. Fantastic, guys. I don't want to keep talking and getting into this if it's not working. And that has happened once in the past. But after a bit of a scare initially, I think it's all working loud and clear. So thank you all. Right, let's continue on with describing what's happening here. So back in 2008, 2009, after the GFC, I tweeted today that I'm so old, I actually remember when this $700 billion bailout was a huge deal. Nothing like that had been done before, and this got debated. It was in the media. This had to be kind of rushed through. Initially, there was a bit of pushback, so the House did reject it, and then it got pushed through as an emergency measure. So $700 billion, that was an enormous amount of money at the time. As you remember, if you've watched all the different documentaries, Frank Paulson, he's ringing up, he's saying, we've probably got 24 or 48 hours if we don't do this, world markets are going to collapse. The banks and the powers that be basically, again, they've got their way. They hold a gun to the head of these, government bureaucrats and say, you need to bail us out or else. So that did get passed, but people weren't happy about it, and that started the Occupy Wall Street movement. Now, a couple of years ago, we had the 10-year anniversary of that. More people were protesting. This is a photo from the actual 10-year anniversary of Occupy Wall Street, rather than the actual event itself. And things like holding banks accountable, whatnot. And here we are in this situation again where the public haven't taken to the street yet, mainly because they're not allowed to go out to the street. Whether or not they would be protesting if they're allowed to, who knows? Maybe that is one of the reasons why governments aren't sensing the pushback or whatnot to the trillions of dollars. But I think we're probably going to see this in the fallout in the pursuing weeks either way, that people are going to make their voice be heard, because at the moment it looks like the trillions of dollars are probably going to Wall Street and banks first, and maybe not getting to where it's needed, which we're going to get to tonight. So you can read more about Occupy Wall Street, watch all those documentaries. I made a video called Top 10 Finance and Economic Documentaries. If you search that video up, watch all those, and you'll really go down the rabbit hole if you haven't already. So one of the reasons the US have been able to print all this money and get away with it, and yes, the purchasing power has been going down, but once again, that is relevant to what is going on around us, and other currencies around the world have been doing this to a greater degree or all at once. So everyone is losing their purchasing power compared to what? If you're talking about the Aussie dollar compared to the US dollar and whatnot, that's not actually the comparison we want to make, because we're still comparing that asset class within that one asset class. So we want to compare currencies to things like gold, real estate, real assets. And I'll get to this later, but for the first time in history, we've actually got a measuring stick that can't be changed, or a digital measuring stick in Bitcoin that we are comparing everything to. And that is really, really important going forward. So lately, yes, government bonds, US government bonds have been a place where investors have flocked. Now, the debt ceiling keeps going up and up and up. There's actually no real debt ceiling. You guys know the story there. But foreign creditors have actually been selling a lot of their bonds, and that's where we get into the things like financial warfare, China trying to dump US treasuries on market. If they can dump all their bonds and put a lot of pressure on the open market and push up interest rates in the US when they've got all this debt, that could crush their economy. So now the Fed are coming in and saying, well, we'll buy all those bonds to keep interest rates low. We don't want to let China and Russia, Japan dump all these treasury bonds, flood the market. And as you guys know, bond prices move in the opposite direction of yield, because if someone wants to lend you money and everyone wants to give you that money, you can say, well, I can offer a lower yield. Whereas if everyone is selling those into market, you've got to offer a higher interest rate to try and attract someone to buy it because of that added risk. So here we can see in red the total percent of debt on the right-hand side, and foreigners holding a smaller and smaller amount, even though the total amount of US debt is going up, and that is because of how much the Fed has been buying. But let's not talk that down. We're going to talk about how many dollars are still outside the US. That's really important. So here we can see TLT. This is an ETF. Everything I'm going to talk about tonight, they're all tradable ETFs. If you're in Australia, they're all on eToro. So let's have a look. TLT, the price of these bonds, the ETFs, this has just been going up and up and up, and had this blow off top from 110 in November 2018, so a bit over a year, up to 180. That's an insane move when you consider for years and years we're sitting around this 90 mark. So bonds don't really change that much in the coupon price. Interest rates have changed a fair bit, but then this blow off top, this is a monthly chart. This is just an enormous move for the bond market. And what it represents is January 2020 here. As we tick over, things start to get rocky, markets start to crash, a lot of uncertainty. Where are you going to go? You're going to go into a US Treasury bond because you can still get a decent yield. So if we type US 10-year government bond Treasury yield, you can see that even at the start of this year, you could still get 2%. When around the world we have negative interest rates across Europe and whatnot. So the fact that you can go to the strongest currency in the world, the US dollar, and still get 2% when you've made a fortune in world markets, sell out, still get 2%, that is happy days, and you're getting paid out in a good currency. It's no point going and buying an Argentinian bond and getting promised 17% if they're going to pay you out in the local currency. The peso, I believe it is in Argentina. Correct me if I'm wrong in the comments. A lot of the time you'll see now, overseas countries will have their bonds and they'll now have to pay out the dividends and the yield in US dollars. So this is where we start to get into this picture of foreign dollars, all these US dollars that are held outside the US, all the oil that's traded in dollars, the petrodollar you've probably heard. A lot of people will do their lending and trade in US dollars. All those banks need to hold dollars. A lot of governments need to hold dollars. In Australia, we've got a lot of US dollars. So that is why you see this huge demand for dollars everywhere, particularly at a time for a big sell-off and that's why yields have been crushed in the US. You can't quite see this behind me here. I'll bring it up a bit. So you can still get about 0.7% on a US longer dated bond. So, we're talking the 10-year treasuries, 30-year bonds and whatnot. Around the world, if interest rates go to zero, this is what Raul talks about. He thinks that rates are going to get crushed and probably end up going to zero, the same as they are across Europe. That's going to happen in the US. So if that does happen, that probably means that the price of those bonds probably keeps going higher. So that's a trade where I don't think he has that on at the moment. I think he's really waiting for the dust to settle a little bit more, but that's the thought process behind that trade. Interest rates crushed, bond prices keep going up. And this is something that I've spoken about on the channel a lot, that the US are going to be forced to do what everyone else was doing all the past couple of years if you've been watching the channel. So that is just one type of bond. And then we work our way down from US Treasury bonds, which are the safest and the best. The US government is supposedly never going to fail, like we've seen Argentina default again and again, because the US are the world reserve currency. They have a privilege where they can keep printing money. So you're always going to get paid back on your bond. Now, whether or not that money is hyperinflated one day is a different story, but so far that's never been a concern of people. And despite the chart looking like this, it doesn't really matter because it's all relative, which is that point that I want to really drill home to you tonight. So look, I hope that's all making sense. Hey, Crypto Lark, it looks like he's in the house. He does have the best shirts ever, doesn't he? So I'll keep going. I want to get through all this stuff tonight really quickly, but those first few points are really important. So other ETFs that you can trade and that the US are now buying. So this is investment grade bonds. They announced that they're going to start buying these. So big sell-off, Fed announced they're going to buy them, bang, snapback rally. That's LQD. Next up here, we've got something like HYG, high yield high yield bonds. And again, that bounce back there. And JNK, that crazy that JNK literally junk bonds, having a huge snapback rally. But where this gets really controversial, so this is the iShares HYG, the ETF. So it's an ETF that's made up of all this high yield sort of junk debt, and guess who is helping them buy it? We'll get to that in just a second. But it shouldn't come as any surprise to you. I did this video the other day talking about how this can lead to the collapse of the energy sector. And less than, 12 hours later after doing this video and joining all the dots for you guys saying this is going to cause the whole market to collapse, that's when the Fed make their announcement. So I've already been through that J&K chart with you here, but this is the point I want to get to. It's BlackRock. They create those ETFs, and here they are helping the Fed buy their own bonds that are in the ETF and the junk bond ETF itself. So they get to push up the price of their own assets with free money that's being printed out of thin air. So this is one step away from the Fed doing it themselves, but effectively it's the same thing. And that's where markets have just completely detached from reality. And as the article on Forbes says here, this is the day that Donald Trump and the Fed have really ended free markets and capitalism. Because what's the message? What's it saying to people? If you borrow heaps of money, issue heaps of bonds, at terrible junk market rates, none of it matters, because if anything bad ever happens, you'll get bailed out. Pay yourself those huge bonuses. Borrow more money to buy your shares back in, or your execs get their bonuses as well. But then when you fail, everyone at the bottom of the pyramid of your workplace, they all lose their jobs. But you got your bonuses, you got your dividends, you got paid, and now you're getting bailed out. So that it really is nuts, and I wish more people understood this, and we probably would have more protests. So with all this happening, the stock markets have had a bounce. Now, it's very normal to have these dead cat bounces. The other day was sort of sitting for a few days really right below that 50% fib. We've sort of peaked our head above here now, and this to me, I love when we get at this 61.8, this golden ratio I often talk about. If you're in our members group, you'll see me use this a lot with our technical analysis. So look, if we were to get up to here, I think that would be an even better ideal trade, but anywhere around here, we've had a pretty decent bounce now, and we're waiting to see what happens next. Personally, I think we're heading lower in the coming months. This is just really splitting hairs about what happens in the shorter, immediate future. But there is also a scenario where we just rip higher, which makes no sense whatsoever, but I want to talk about that at the end. Am I still streaming? Yeah, I'm still streaming loud and clear. I've cut out over here on my other monitor. I hope that hasn't cut out for you guys at home. 1 second. No, all good. Okay, let's keep going. All right, so the other thing that we're hearing a lot in the news is Donald Trump and the Fed are destroying the dollar. You can't print $8 trillion and not expect prices to fall, the value of the dollar. If Venezuela were to print trillions of dollars, guess what would happen? That hyperinflation. So one term that confused a lot of people, and it certainly confused me early on, was the Eurodollar. So with all these dollars that are being printed, there's actually a huge demand for those dollars outside the US. And the euro doesn't refer to Europe or the euro currency. It came about to represent dollars that were in Europe or any other currency outside of the US. So that's all you have to worry about. When you hear the Eurodollar, you don't have to think about the euro priced in dollars or the euro US dollar chart or anything like that. The Eurodollar just means dollars that are in Europe or outside the United States, anywhere in the world. So that's really important to understand that term. And lately, there's been huge amounts. We're talking shortages of estimates between 10 and 20 trillion in euro dollars around the world. And that's why the Fed have had to open up those swap lines directly to the ECB, to the Australian Central Bank, the RBA. They've had to open up these lines because they can't give money to the banks in the US and then ask them to lend out. And this is where the repo markets have frozen over, because those banks are too scared to lend out to each other, saying, look, I need dollars or I need US bonds. And they're saying, yeah, I don't know about that. There's a fair chance that you're going to collapse or be insolvent, this, that, or the other. So the banks, they're scared to lend to each other. Everyone wants dollars. At the moment, that has led to this global rush into the US dollar, despite everything that's happening. And yeah, there's still a bit of a temporary shortage. So this is the plumbing that the Fed are trying to fix. Now, if you want more information on that, Real Vision have done some fantastic interviews on all that. Obviously, Raul and I talked about it in detail in that video. But yeah, the guys at Real Vision, and there's some great articles floating around. I think I retweeted another one yesterday about the Eurodollar and how it all works. Now we've got competition for those dollars outside the US. And this is something that I've actually been talking to Raul a fair bit lately. We want to do some stuff together about crypto, but we also think that the overlap between stable coins and what is going on with this Eurodollar is very, very important, because for the first time ever, you can get these digital representation of dollars outside the US. So if I want to send Crypto Lark some US dollars because he's worried about the New Zealand dollar falling and I'm worried about the Aussie dollar, and we've got customers around the world, we can now send digital US dollars, whether it's Tether or USDC, whatever it is, okay? We can send them around the world. MakerDAI and Synthetics with their synthetic USD. There's a way for us to send digital versions of US dollars around the world by just downloading an app. Very easy to do, and that's probably a superior system to what's going on with the Fed and trying to open up these swap lines. And XRP and Ripple talk about what they're doing with the banks and trying to make a better SWIFT system because of how terrible it is. The fact is, we've probably got something that works fairly well already. Now, Bitcoin, Ethereum probably can't handle the throughput of millions or billions of people at the moment, but second layers like what Loopring are doing and some of this technology being built on Ethereum, in theory, could handle all that. So I don't want to talk about that too much. There's a chart of the US dollar. This is a basket of currencies compared to the US dollar, and that's really important to remember when the US dollar is going up, that it's more of a sign that other currencies are going down. So CEW is a emerging market currency ETF. And as you can see, all emerging market currencies have been really, really crushed lately. In recent years, as the US dollar's got stronger and stronger. So it's not just, the good old Aussie dollar that people complain about that's getting crushed. USD. Now, just quickly, in terms of currencies, I want to just mention this. The other day, you guys will remember, I actually did a video. It was that video we just showed about how to be your own bank, because we had a record number of people asking us about, how do I get out of the Aussie dollar? It's falling, it's collapsing. And in that video and in the posts I did for members, I was saying, look, I haven't got this many messages from people about how to put on a specific trade since Bitcoin peaked. And everyone was saying, how do I buy Bitcoin? And this was, how do I sell Aussie dollars? How do I buy US dollars? And I said that this is capitulation. As a trader here, I actually want to be buying. I think there's a big bounce coming. And sure enough, that's played out really nicely. Now, for those of you that are asking, if you were patient, then this is probably when I would look to rotate out of my Aussie dollars if that's what I'm worried about, because here we are with a perfect fib retracement back up again to 61.8. And I think we are probably going to continue lower. I think Australia's economy is going to be one of the weakest. And that's basically the news we got out of the IMF today. So, look, I don't agree with them at all in terms of this projection of this rebound. Here's a chart of that where they're saying, yeah, around the world, we're probably going to see 7% GDP, contractions. I think around the entire world, their estimates are, I think it was 3%, something in that vicinity, which again, it's still far bigger than the GFC, but they're saying it's going to be a bounce back the following year and everything's going to be fine. And I don't really agree with that. I think this is going to take time to sort out. Now, why is that? Unemployment, huge numbers around the world. Estimates in Canada of up to 30%. In Australia, the official figure is not going to be that high because of the job keeper and how our government is paying businesses to keep employees on the books, and they're not necessarily going to end up as an unemployment stat, even though effectively they're on government stimulus and handouts. The real issue here, like we just spoke about, is how quickly can governments get this promised money into the hands of people. So in Australia, we're hearing stories of businesses that don't have enough cash flow because the government is saying, look, hold in there and pay your staff, we'll back pay you. But a lot of restaurants don't have more than a couple of days cash flow on hand. A lot of businesses, they're that way and they've got all their debt and whatnot. So the reality is that a percent of businesses, whether that's 5% or 25%, we don't know, aren't even going to be able to stay open to pay that job keeper or to get that stimulus. Same in the US. We're hearing stories of some people that are going to get their $1,200 check if they've done their tax and whatnot. I believe there's 3 different categories, and if you don't fall into the first 2, you might have to wait for a paper check in the mail. Some people are telling me that they could be, weeks or possibly months away. So this stimulus is not going to get to where it's needed, where people have already been out of work for weeks and weeks in some instances. So Australia's stimulus package is one of the biggest globally, way bigger than the GFC, and per capita, I think we're number 1 or 2 in the world compared to how big other countries' stimulus measures have been. So once again, hearing stories that yes, that's all well and good for the banks and whatnot, but people are going into the bank to get their mortgage frozen and being told, you don't qualify for refinancing, or you're in an industry that we're not lending to. You're in tourism. We're not lending to you no matter what. Then you've got your landlords. They're trying to sort things out with their tenants. Their tenants are saying, well, you can't evict me, I'm not paying. It really is a mess, and that's what our government are trying to sort out at the moment. We've got landlords telling people they have to dig into their super and borrow money to pay their rent and whatnot. So yeah, a lot of Aussies trying to dig into their retirement fund. That's a huge percentage of our population when you consider there's probably 20 million working age people. Very big percentage of those people. Again, if they all pull out that $10,000 or $20,000, where's that coming from? It's coming from our stock market. That's going to go down. It's coming from these real estate investment funds. So yeah, a lot of these packages have been announced, but I just think in the real world, there's a lot of intricacies that we're not sort of discounting in yet when markets are rallying back. Here's one of the real estate ETFs. This is VAP. So this is down 50% at one stage, a real estate trust. Another one in Australia is MVA. Again, big falls, 40%. And we're being told by Domain and realestate.com that property is still at all-time highs in some suburbs. I just think we're going to see so many properties on markets. I shared with you the other day the story of the people that have been doing these courses where it tells you to get a credit card and get your first Airbnb, start renting that out. And we've got people that have worked their way up to 20 Airbnbs around Sydney, Melbourne, Brisbane, Gold Coast, constantly filled with Chinese tourists and people on holidays and flying around for work. So they're earning a fortune, but their landlord doesn't even know they're doing that. A lot of the time it's illegal. Now, sometimes it's part of the sublease. They can do that. But these people have now gone from making a heap of money to ringing up 20 different landlords who thought they had a tenant that was paying every week and that everything was fine. And that's 20 properties that are hitting the market. And that's what we're seeing in the numbers. Fully furnished Airbnbs are hitting the market for long-time renters, something that Martin and I discussed in last week's video. Now we get into the things that I think are going to cause the biggest impact and why stock markets aren't going to rebound, or the real economy isn't going to rebound. And this is why stocks shouldn't rebound, but they might, which I'll get to. So food supply chains are being strained by this virus. We're hearing about things like pork that, because they supply the restaurants, the supply chain's been disrupted and diverted. They can't go to the supermarkets where it's needed. So farmers have been battered by this food glut because of how America eats. So many Americans eat takeaway. I think the stat was something like 20 or 30% of Americans eat takeaway every single day, and they're just not simply equipped to redivert all these food chains away from restaurants into supermarkets with the different branding and the deals, the contracts that are in place. So we're seeing photos like this, people literally just pouring millions of gallons of milk, onto paddocks. And at the same time, we've got these food banks where they're running out of food. What would the people that are starving around America give for 3 chocolate milkshakes a day for their hungry kids, or whatever it is? You guys get the point, whether it's the pork or the milk. This is just really highlighting. And, I don't want to talk about agri-chain or these other little projects, but there's lots of supply chain projects that are trying to fix these sort of issues, because if we can get that seller in touch with someone else that's in the next step of the food chain and cut out the big corporate, the businesses and the middleman that are controlling all this, to say, oh look, there's someone in the suburb over from me that could use all this milk, start a food bank, feed hungry people. I wish that technology was in place and being widely used, but that's not the case. Similar stories in Indonesia. It's these developing nations that are going to get absolutely smashed. One of my good friends is a consulate, lives over there in Indonesia, and he was telling me about one province which has just got so much fish that's no longer being shipped to restaurants around the world. It's just going to waste. In the next province over, they've got too much rice, but they don't have any fish. That rice is all probably going to be dumped and go to waste because they don't have the complexity in their supply chains to redirect things. So this is just, this is a tragedy that fish, rice, milk, the businesses are going broke, food going to waste, and at the same time we've got people that are starving, and it doesn't have to be that way. Final number here in terms of the economy, 200 million Chinese workers can't find jobs. So yeah, we're hearing the stories that China's reopened and everything's bounced back. That's, it's just not the case. And that's going to come through in the numbers and the demand. Even if China opens up, are we demanding all their toys made in China? Are we going out shopping? Are we buying toys? Whatever it is, t-shirts, goods, the US, these consumer economies, Europe, we don't have the money at the moment. People have lost their jobs. All the people that worked in these factories, even if they do make things, that's not going to get past the inventory level, and then they're out of their job after that. So that's the supply chains, the globalization that's breaking down, that I see as the biggest reason why economies aren't going to recover anytime soon. And it only takes one link in the supply chain. We can have 10 countries that are open and good to go. If there's 1 or 2 that are closed and they're in that supply chain anywhere, that causes the disruption. On top of that, we've got the politics. So Trump today, halting that funding for World Health Organization. Yes, they were probably pretty ordinary at times, but I think a lot of governments, I was pretty critical when there was enough evidence to lock things down, start wearing masks, start widespread testing, stop letting people in. I think all governments have really made a mess of this. I think Trump was still calling it the flu, and now he's come out and talking about how he was one of the people that was ahead of it and whatnot. So look, everyone's trying to say that they saw it and they called this, but really none of our leaders did at all. Honestly, YouTubers like myself and Chris Martinson and that were weeks ahead of any official government response. That's why I was so vocal. And finally, this interview with Danielle DiMartino Booth. This is over on Valuetainment, one of the best interviews I've seen. Ignore the title there. This is all about the trade war, what's going on at the moment, and the clause that China had where they didn't have to buy US goods if there was a disaster or act of God, I think is the wording. So sure enough, that trade deal is going to break down with the US at a time when frictions between the China and World Health Organization, US, it's all rising. So I think the world is going to be a different place. Now, if all that's happening, there's less demand for commodities. This is USCI, the World Commodity Index. This is at, I think, all-time lows. And when we look at something like the US stock market, so let's just go SPY, which is the S&P 500. And let's go divided by, which you can do for any two products, guys. You've just got to choose the product you want and then click enter. And that's going to show us that the ratio between stocks compared to commodities has never been higher, or inversely, commodities have never been lower. They've never been more oversold or undervalued compared to stocks around the world. So it's all that funny money pushing up paper prices, stock market prices, pretend Wall Street things, when real commodities in the real world is at the lows. And that is the problem that I'm trying to highlight in this video tonight, why I think real economies aren't going to recover. So yes, we talk about the US national debt. It's the same for every country. Look at down this list. Even Australia, we've only got a population of 25 million, and here we are with this, this big national debt. Now, compared to GDP, it's not too bad, but the story is the same. Every country around the world is now going to start to do what the US has done, because they're going to say, well, comparatively, it's not that bad if we're all doing it at the same time. Or even worse, if the US currency starts to weaken, we need to weaken our currency. The China are going to try and get rid of that loose peg that they've got. Australia are going to try and get the Aussie dollar down. If it keeps going higher, they're going to fight that because of our exports and whatnot. So tying this all together, really important to understand how money is created. Only 3% of actual physical notes and coins is created by government, where they actually can mint that money and put into circulation. A lot of it is reserves. The Federal Reserve will create money and whatnot. Most people are familiar with that, and they're pumping more of those reserves into the system at the moment from buying bonds off the government, or even just doing it directly these days, buying ETFs and whatnot. But it's bank deposits. This is what Steve Keen talks about. It's banks that lend money that really create a lot of that digital money out there. This is where we're getting a power struggle between central banks that want to print money, giving it to banks, and it's really the banks that create that money or get it into the system when they start to lend out, and that's not happening. It's no good giving a small business a loan and telling them that they can freeze their rent if they've got no customers, if you're a restaurant and whatnot. So you can't make up for that demand, which has fallen off a cliff, by giving people money. But governments are wanting to spend and do their own modern money, monetary theory, whatever you want to call it. They're now saying, should we just spend money? They're all stimulating and it's working. Maybe we should do this big fiscal spending, spend a lot on hospitals and education and whatnot, and not even issue the bonds for the Federal Reserve to buy, or the central bank. Why do we do that? And then they give us money. Why don't we just spend that money anyway? It doesn't really matter. So this is where we're going to see, I think, a fight and friction. We already saw that between Donald Trump and Jay Powell, but now it's between the three. The banks have got a lot of power and influence and money. No, but the Fed actually wants to create the ability for people to have these digital dollars where you have an account at the Fed. You don't need a bank account anymore. And think about, that tension there, as well as governments that are going to say, well, we want a digital US dollar. We want to issue it and we want to spend it. So this is where the argument about what is money is really taking off. So yes, stable coins have risen in popularity for all the reasons I've outlined, because it's very easy to now get a digital crypto US dollar. It's far easier than getting real US dollars. The Fed are busy trying to do these swap lines and liquidity injections where anyone can download a Coinbase app or open an Ethereum address. That's all you need to get your hands on some DAI stablecoin. So this is where the crypto world is actually far better than the government central bank issued digital currencies already. The decentralized projects are the most important in my mind. So Maker and Synthetics, they've already got a synthetic euro, Japanese yen, Aussie dollar. This is the whole argument for me about why we've already got the ability to do, cross-border payments, different currencies. It's all there already through what Synthetics are doing. But this would be the easy way for people to get money into accounts and do stimuluses and copy this model, or governments use this model, but they're going to complicate things and come out with their own digital coins. But where does this all lead to? And the answer, if you're not the US and you're not the world reserve currency, it leads to inflation. So I'm going to tie this together really quickly and keep this under an hour for you guys. If you're not the world reserve currency and you're not intertwined with that global economy, guess what happens when you print a lot of money? You just get huge inflation. And that's what we've seen time after time, country after country, to different degrees. Now, that's where I think the real danger lies when everyone starts to try and stimulate. This is what might happen in the US. So just because Venezuela's stock market, as you can see here, is at record highs, not a good thing. So we actually could get this situation where the US stock market goes to maybe it's $5,000. Who really knows? But I think it's actually on the cards if they just print huge amounts of money and fundamentals go out the window. Then the US dollar slowly loses its world reserve status. There's less petrodollar oil trading. There's less demand or need for those Eurodollars. They all meet their demands. They pay off their debt, or they say, we're going to go to gold instead, or something else instead, but we're getting rid of this system. It's penalizing us too much, and it's not conspiracy anymore. I've spoken about how Mark Carney and the Bank of England, they've said that very clearly. The US has that privilege that they get to print as much as they want and still have all this external demand, and that is pushing up the price of the US dollar. So finally, the other outcome here of printing that money is not getting inflation, not actually getting that money into the economy and circulating. So Japan tried. They took interest rates to zero. Their government bought all the bonds off the government and said, spend, spend, spend. They even bought these ETFs, but this is a monthly chart. The stock market peaked back in 1990, and here we are 20 years later, and it fell 80%. Who would have thought that would happen in Japan? So they're the two extremes. You can either get the inflation and everything looks good nominally on that number on the screen, or you can actually have this real world sort of deflation where it doesn't really matter what you do because of the bad demographics, people unwinding their positions. Your economy becomes less important to the rest of the world. People sell off their assets. They get back whatever they can get and they move on and they put their money elsewhere. So this is the danger of what can happen in any country. Japan was a leading economy, so don't think that this couldn't happen in, say, Australia. It is possible. And if it happens in the US, that's the final penny to drop. If everyone sees another currency as something better than the US, because traditionally they've always had that sort of privilege. And again, the video that I did about this, talking about negative interest rates and how interest rates work, how those bond yields work, where people moved up that risk curve going into junk to try and get a yield. Most importantly, what we're seeing now with that US 10-year yield down near 0.7%, as I spoke about, towards the beginning of the video. Once that gets to zero, everything changes. There's no longer a need to hold a US government bond at that point because A, you're worried about the currency that it's in depreciating in value and you're not getting a yield anymore. So that all the reasons that you've had to hold US dollars ever are no longer there. And you say, well, where else do I go? And you look down this list. Do you want to hold, the Chinese yuan with everything going on geopolitically? No way. The euro's in a world of trouble with their banks and their debt and all the friction between those countries. Japan, no. And that's why gold, since this has been made, it's probably passed Japan. Gold's up 20 or 30%. So its market cap now is probably past $9 trillion. And it's now probably the third or fourth most used currency in terms of its market cap, the M2 money supply. So that's where gold can absolutely have its day. And Bitcoin down the bottom here as well for different reasons, smaller market cap. But when you look at these numbers, there's still a long way if gold can capture this market share off these other currencies. And when you look around the world at these investment funds, 20 trillion, 5 trillion in Europe, all this money that's washing around, let alone the Forex reserves around the world and all these bond markets, people escape, and get away from this yield. Tens of trillions of dollars can still be looking to go into gold. And I think it is going to go into gold first. Tens of trillions of dollars simply can't go into Bitcoin yet. It's just too small. I'd love it to happen, but for $10 trillion to go into Bitcoin at the moment, think about that market cap. It's just going to be too wildly volatile. But over the long term, sure, maybe it can get there. Now, the other play when you can't get a yield is obviously the DeFi lending space. That's very attractive. Yields will come down as more people go into that space. The basics of supply and demand, it will level out, but that's an attractive option at the moment. There's insurance. So this is something that's holding people back from investing. If you've got $1,000 and you're a bit nervous about it, well, you can now insure that $1,000 in DeFi through these projects that I've covered, will continue to cover and have on the channel. So your members know that some of these we've invested in, they're my favorites. And if you want more information about all these, over on our website, guys, in the resources hub, we've got DeFi as one of the modules to learn about. So gold, we've seen the supposed amounts that the US have and Germany and whatnot. People try to repatriate and get told it's going to take years. So we don't actually know if these are the true numbers. And I very much doubt that the US has the amount of gold that they say they do. Either way, blockchains, transparency, that's all going to come out in the wash sooner or later. Huge demand for these countries that are turning away from the dollar. Yes, Russia have pulled back a bit lately, but I think that they're in a different boat. They don't have a lot of debt. As I spoke about in the oil video, they are ready to fight tooth and nail to get rid of the US dollar hegemony, the petrodollar standard. So is Saudi Arabia, so is China. So the time is right. The game of chess is now to the point where countries are ready to kick the US while it's down to some degree. It's the best chance they've ever had to get away from the US dollar. So it's no surprise to me that gold's having this tremendous run. Crazy to think about that we were talking about it only 2 years ago and you could have bought gold for under 1,200 US still. Technically it was beautiful. Inverse head and shoulders, 61% pullback and then off to the races again. Let's just get that off the chart. I think we've had that $1.5 trillion, $2 trillion pour in, and we've had a pretty decent move. But again, let's divide gold by those world currencies. So anything, let's go back to the CW, enter. We can see that gold's at all-time highs against a basket of world currencies. So it's only really the US dollar where it's not already at all-time highs. So going back to what I said at the very start of the video, with always thinking about what are we comparing it to? And that's where I think this run could really just be getting started. Considering the US dollar has strengthened and gold in US dollars is still going up. That's something that very rarely happens. We're now within striking distance, 10% away from all-time highs. Very, very rare. Normally when gold's going up, the US dollar would be going down because gold is priced in US dollars. So the fact that if gold starts to pull back, we could see, if the dollar starts to pull back, that could be another leg higher for gold when it's already doing really well. So finally, tying it all together, Bitcoin, enough has been said in this video. Those trillions of dollars, we're splitting hairs at the moment with Bitcoin. I think longer term, next 5 years, my goal easily now with all the stimulus that's happening is $100,000 Bitcoin. At the moment, let's just zoom in and have a look at a shorter term chart. It's been a rocky ride. What we've learned is that price discovery is happening on these 100x leverage exchanges still, and price and value are two different things. One day a Bitcoin is worth $8,000, the next day it's worth $3,000. That's the price on a screen. That is not the value of a Bitcoin in the world that we're living in. So yeah, at the moment, technically, I've been talking about this zone and how we might have a bit of a pullback, but boy, oh boy, I think if we get that, that is a massive buying opportunity if you're thinking long term. And I think we are going to break the correlation to stock markets. I don't think we're just going to keep going on with Bitcoin following stocks. If we ramp up this money printing, I do think it's Bitcoin's best chance to prove that it can do its own thing and break away. That correlation wasn't there, months and years ago. It's not going to be there forever. But for the time being, take advantage of it. Like we're taking advantage of the low paper silver price to buy the ETF. Take advantage if Bitcoin gets dragged down. Listen to Raul and all those guests, people that are talking about gold and Bitcoin, trillions of dollars that are going to be rotating into that. And I get nostalgia when I think about Bitcoin sub $1 billion market cap. And I just had that gut feeling when you're looking at these numbers saying, it could do that, it could do that. And here we are with everything happening, and it is going to do that now. It is just stamping itself on the world. Gradually, it's going to happen. One country, one after another. You look at the market cap of these companies that are, propped up with phony money and whatnot. And at the end of the day, just like we saw in Japan, anything can happen where people start to lose interest in their stocks and there's a rush to real assets. Maybe the US stock market holds up okay, but other countries around the world don't. It's just so much money. That's the takeaway message from this video. So much money around the world. And for the first time ever, we've now got a digital measuring stick. There's no currency. You don't need the US dollar anymore. We've got gold. We've got Bitcoin. There's places for people to easily park their money. So guys, there's a quick list of a lot of the ETFs I mentioned. As I said, all of them are tradable on eToro. For example, the emerging markets ETF, EEM, that is one that I'll be looking to trade because I think the emerging markets could struggle even if the US stock market does okay. A lot of you guys asked me about the Australian market. Yes, I do think that's a good chance to roll over. The ticker there is Oz 200, and that's one that I'll definitely be looking to short. So look, don't forget, we've got that $100 giveaway going with eToro still. If you do want to sign up, that link's down below. I hope you guys have enjoyed all that. Take advantage of the free education we've got over on the website. I hope that's all tied together and made sense for you. Think about assets comparatively. Think about those trillions of dollars that are going to look to find a home. For the first time in history, we've got a digital measuring stick to compare what everything else is with when governments and central banks are printing trillions of dollars. So smash that like button, guys. Subscribe if you haven't already. Share this video around with your friends and family that need to go down the rabbit hole. And I'll talk to you again soon. Cheers.